Morning.
Mic test 1, 2, 3. Okay, very good morning to all. Welcome to today's Daily Dose of Market Insights. I'm Kelvin Wong here, the Senior Market Analyst of OANDA Asia Pacific. So welcome to today's Daily Dose. Today will be the Wednesday. So far as we already approached the midweek, 6th of December. So before we start our Daily Dose, as usual, let's take a look at the disclaimer slides first. All right. Okay, leverage trading carries a high degree of risk and may not be suitable for everyone. Losses can exceed deposits. This presentation is not an offer or solicitation to buy or sell, nor financial advice or recommendation for any investment product, as well as any forecast, prediction, or projection in this presentation is not necessarily indicative of the future or likely performance of the product. This advertisement has not been reviewed by the Monetary Authority of Singapore. All right. So now, so these are the three key takeaways, our usual three key takeaways that I'll share with you in our daily market dose. Will be a recap. Firstly, a recap of what happened last night. That means during the late Asia session to the US session, as well as short-term technical outlook on the broad-based asset classes, and also to round up, I will share with you all what are the key potential market moving events for today. All right. So now, what happened last night? So last night, what we could see over here is that in markets first, the US 10-year Treasury yield continued to actually inch downwards. So right now, it's actually trading way below the 20 and the 50-day moving average. So that actually benefited the long duration equity in the US equity space, especially the 7 mega cap US stocks, which actually recovered yesterday after 2 consecutive days of weakness that kickstarted on Monday. So I would say that in the US stock market session was a rather yo-yo session over here. So if you could look at the heat map of the S&P 500 as a whole, so we could see that overall the market is being led by the 7 mega cap stocks over here. Okay, a bit from the healthcare and consumer defensive, but the rest of the US sector actually underperformed. So given the fact that a very strong stellar performance on the 7 mega cap, Apple plus 2%, you have Nvidia plus 2.32%, and Amazon and Tesla plus 1.5% and thereabout. So if you look at this performance over here, in the US stock market, what we could see is that the Nasdaq 100 actually outperformed yesterday with 0.24%. Almost no change on the S&P at negative 0.06%. The Dow Jones Industrial Average negative 0.22%. The Russell underperformed with negative 1.4%. So later I'll share with you the short-term technical outlook on the Dow Jones and the Nasdaq 100. Overall, what we could see over here is that despite this yo-yo movement that kickstarted since about 1.5 weeks ago, with the Dow Jones Industrial outperforming the Nasdaq 100. Overall, the short-term to medium-term uptrend that kickstarted since towards the end of October still remains intact. Later, I'll share with you more details on the key levels to watch for today on these two indices. And over here, I want to highlight to you that the European index over here, especially the German 30. So this is the German 30. Pardon me. Okay, if you look at the European index, the German index, so European index continue to actually resume. Okay, I would say continue their stellar performance, where the German DAX index actually rose to a fresh all-time high yesterday. All right, so the fresh all-time high previously was met in July, the German DAX July this year at 15,528. Yesterday, the cash German index closed at 15,333. So it's actually a fresh all-time high, fresh all-time high level that was actually been met yesterday for the European indices, taking the German DAX as a proxy. Okay, so still pretty much rosy on the European indices front. If you look at the last 2 weeks, it's actually outperforming the US major stock indices in terms of percentage. Why? Because several key ECB officials have started to tilt towards the dovish side of the story. Then as for the dollar actually yesterday was pretty much yo-yo as well. So if you look at the dollar index over here, what we could see is, if I were to share with you all, this will be the 1 month rolling performance as of today. So what I could see is that the euro currency actually underperformed against the dollar. Means the dollars actually surged against the euro as well as the CAD as well as the Aussie dollar. So given the fact that yesterday we do have a rather dovish a tilt in the release of that accompany RBA monetary policy statement. So yesterday RBA as expected keep interest rate unchanged, their benchmark interest rate unchanged, but however the accompanying monetary policy statement sounded much more dovish versus the the hawkish rhetoric public speeches that was made by their newly appointed RBA Governor Bailey in about 1 week ago. So that actually explained the sell-off in the Aussie dollar. So that leads to be about a sideways movement overall in the dollar in the FX market space. So if we go down to the lower time frame, that means this is a rolling 1 month. So if I go to the rolling 5-day over here, so what we could see over here very clearly is the dollar that is strengthening against the euro. One clear movement. The rest over here is that the dollar starts to weaken over here, okay, as you could see. So what we could see over here is that overall the medium term and the short term trend of the dollar that kick-started at the end of October still remains more on the weak side of the story rather than a calling for a potential strong dollar bullish reversal at this point in time. Okay, all right. So then for commodity markets, gold remains sideways, holding above a key support level at around the 2010 2007 after shipping that minor corrective decline since the start of this week. For oil, remains lackluster but holding above a key short-term support level at 72.40 for WTI crude. All right. So now other key, these are the markets, we call it markets recap. So now how about economic data recap? So in terms of economic data recap over here, yesterday we have the ISM Services PMI, which is a key economic data in the US. So why? Because the services sector is actually one of the most important economic driver in the US economy. So the service sector continued to remain rosy, 52.7. Managed to actually slightly beat consensus at 52. So if you look at the trend of the services PMI over here at this point in time, okay, it's going to actually hover above the 50 level mark. All right, hover above 50 level mark for close since very clearly yeah, since January this year. Okay, be hovering this mark. So it's around about 52, highest level about 54 range. So what we could see over here is that the US economy appears to be still in a kind of a Goldilocks scenario, as indicated by this latest reading from this ISM Services PMI data. All right, then what we could see over here is that there's another news event that I highlight over here is that there's this Moody itself. So Moody itself right now has actually started to downgrade the China's sovereign outlook, corporate the sovereign bond outlook, all right, Moody, all right. So China cut the outlook over here. So but however this outlook was actually leaked before, and there was a slight leak in social media because so actually they cut their outlook rating to negative on their sovereign bonds, citing concern about the persistent weakness in the China property market. All right. So with that, now let's take a look at the FX market first, in terms of the short-term technical outlook. All right. So on the FX market over here, what we could see is that let us quickly start with the let's start with the stock indices first. Okay, pardon me. Yeah. All right. So for the stock index, let us kickstart with the all right, with the Asia indices, the Hong Kong 33. So for Hong Kong 33 over here, if you look at the last few weeks, last 1.5 weeks, it has been the outlier among the rest of the world, continue to actually underperform, as you could see that the price actually broke below the 20 and the 50-day moving average. Okay, before that, let me expand my chart so you all could see clearer. Yeah, okay, good. So over here, 1 second, please. Oh, sorry, I think I have to give me a minute. 1 second. All right, so okay, one second. I think there is something wrong with the. Okay, might check 1 2 3. Check 1 2 3. Okay, good. All right. Okay, so just to have a quick okay recap. Okay, so the Hong Kong 33 continue to underperform the rest of the world. As you could see, technically the Hong Kong 33 index, as we mentioned, as we labeled in our platform, trading below the 20 and the 50-day moving average. Overall, we start to have a bullish bias tilt since late last week. And yesterday we do have a short-term support level to watch, will be at 16,100. So price level is now very approaching to this 16,100 level mark already pretty soon. So what I could do over here is that potentially, right, if you look at the current state in time over here, is that the RSI over here, if we look at the hourly RSI, has started to shape this bullish divergence where price action did oversold again yesterday, but this oversold level, the swing low managed to be higher than the previous swing low. Okay, you need to ask that yesterday's push down in terms of the momentum has starts to lose strength potentially. So with this positive element that is being flashed out by the hourly RSI, for today, I will actually potentially we could potentially see the start of a minor counter trend rebound, as long as 16,100 key short-term pivotal support holds for today. So I'm using 16,100 short-term pivotal support level to advocate for this potential short-term minor rebound. A breakup above 16,500 potentially exposes the next intermediate resistance at 16,680 level. But however, if we start to see an hourly close below 16,100, then this minor short-term counter trend rebound will be invalidated to see the continuous of this impulsive down move to test the next support level at 15,800 on the Hong Kong 33 index. Right, now moving on next, the German 30 index that we label in our platform. So on the hourly chart, it's going to actually trade within the upper limit, the upper half of this minor ascending channel that is in place since 27th of October low. All right, so all in all, what we could see over here is that yesterday we do have an intermediate resistance level will be at 16,560, which already been surpassed yesterday, So what we could see over here is that there is no clear signs of a bullish exhaustion at this point in time. Okay, let me remove this. Okay, so there's no clear signs of a bullish exhaustion at this point in time. RSI also going to hold shaping higher high on the, even though it hit the overbought level, higher high. So potentially there could be a bit of pullback during the European session. So key support level to watch for today to maintain this short-term bullish outlook will be a tighten one at 16,440, which confluence with the median line of this minor ascending channel, and as well as the former swing high area of 2nd of December to 5th of December, also confluencing at 16,440. So as long as 16,440 holds, potentially the next intermediate resistance to watch will be at 16,660/16,700, followed by 16,780 on the German 30 index. But however, if we start to see a 1 hour close below 16,440, then this short-term bullish outlook will be negated to potentially kickstart a minor corrective pullback to retest the lower limit of this minor ascending channel, now acting as a support at 16,215. We also confluence with the minor congestion area of 29th of November to 1st of December. All right, so now with that, now let's go to the US benchmark indices, starting with the Dow Jones Industrial Average first, which is the Wall Street 30 we call a platform. No change or in terms of the key elements, as price going to actually shape higher low within this minor ascending channel that is in place since 10th of November low. RSI managed to actually hit back above the 50 level mark, indicating to us that some signs of short-term bullish momentum seems to be coming back on the US Wall Street 30. So with that, then price actually also trying to shape this bullish, we call it a pennant, a continuation pattern as well, since the start of 4th of December. So with that, still using 35,930 as my key short-term pivotal support level to maintain that short-term bullish outlook towards the next intermediate resistance level at 36,555, which is so confluence with the upper limit of this minor ascending channel. But however, if we start to see hourly close below 35,930, then potentially we could kickstart a minor corrective pullback towards the next support level. Will be at next intermediate support level to watch will be at 35,490. Okay, now Dow Jones with that sums up the Dow Jones Industrial Average, Nasdaq 100. So Nasdaq 100 also pretty much recovered nicely right at the 15,690 key short-term pivotal support level that we have for 2 weeks in a row. So for sure, this is a key level to maintain the short-term bullish outlook on the Nasdaq 100. So you're still using 15,690 key short-term pivotal support level. A breakout above 16,160 potentially sees the next resistance coming in at 16,310 on the Nasdaq 100. So still maintaining that short-term bullish outlook on Nasdaq 100. But however, an hourly close below 15,690, that means a break also below the 20-day moving average, and as well as the minor ascending channel support that are drawn from the low of 27 October, potentially kickstarts a minor corrective decline towards 15,380 / 15,175, which is also confluence with the upward sloping 50-day moving average. Okay, so that's the outlook for the Nasdaq 100. Now moving on to the FX space. So over the FX space over here, like I mentioned earlier, it was rather mixed at this point in time. So over here, the FX space, if you look at the euro dollar, continue to remains weak over here. So trading below the 200-day moving average. So if you look at why there's a bit of synchronization in various market over here at this point in time, because now we're heading towards year end. When it comes towards year end, this is where liquidity condition starts to temper off, and due to this lower liquidity condition, price action of the various asset classes will start to see their typical correlation fundamental correlationship breakdown in the shorter term. Okay, so that's why I could explain this kind of what I call a bit of what I call dysynchronized movement in the FX space at this point in time. So yeah, euro dollar going to be remains weak. So I will actually use a Titan key short-term pivotal resistance for today, 1.084, which is slightly below the 20-day moving average, so acting as a resistance right now. As long as 1.084 level holds, maintain that short-term bullish outlook towards the next intermediate support at 1.075. A break below it potentially sees 1.07 next, which confluence with the upward sloping 50-day moving average as well. But however, if you start to see an hourly close above 1.084, then we will start to see a revival of that bullish tone in the euro dollar towards the first resistance level will be 1.092, followed by 1.096. All right, for the euro dollar. Now sterling dollar. So the sterling dollar over here yesterday, yes, it starts to dip down slightly lower, but what's interesting over here is that the RSI starts to shape a bullish divergence. All right, lower low in price action, but RSI higher low. Okay, indicate to us that yesterday's push down in price action, that momentum seems to be losing strength. Okay, all right, so with that, right, the next support level to intermediate support will be at this 1.2560, followed by 1.25 figure, which is a psychological level. And this 1.25 figure seems to be much more important. Why? Because it's confluence with other technical elements, which is the rising 20-day moving average, and as well slightly below the 200-day moving average. So instead of using 1.2560 as my key short-term pivotal support level, I'll be watching 1.25 figure level. Okay, 1.25 figure level. So as long as 1.25 figure levels holds on the sterling dollar for today, potentially we could start to see a kind of a recovery scenario, more of a range recovery scenario towards 1.2665. Above it potentially sees a retest of this minor range top that is in place since end of November at 12730 level. Pardon me, 1.2730 level on the sterling dollar. Okay, so do keep a lookout on the sterling dollar. As long as 1.25 figure short-term pivotal support for today didn't break down on the downside, potentially we could see a bit of recovery towards the upper limit of the range configuration for the sterling dollar. But however, if we start to see a breakdown below 125 figure level, then we could see this minor corrective pullback to actually extend towards the next support level at 12430, which confluence with the this ascending channel lower boundary, which the ascending channel support from the low of 1st of November. that's confluence with 1.2430 and as well as the former minor swing high of 6th of November, pointing to this similar level as well, at 1.2430. Okay, so that's the outlook for the European currency. So now moving on, next will be the Asia Pacific currency, will be the Aussie dollar. So Aussie dollar yesterday placed a bit of whipsaw right at the 20-day, 200-day moving average. So now recovering back above the 65.70 level, and also at the median line of this ascending channel that is in place since 26th of October 2023 low. And the RSI on the daily chart managed to actually rebound from this parallel ascending trend line support that I draw from the low of 3rd October as well. So indicating to us there's some signs of momentum, positive momentum resurfacing back into the Aussie dollar, given yesterday's whipsaw movement around the 200-day moving average. So on the shorter term chart over here is that now it's actually going above that 200-day moving average already. So I don't want to put it so tight again at this 65.70 level. So I'll use 65.20 as my key short-term pivotal support for today. So as long as 65.20, 65 figure level managed to hold, we also correspond with the upward sloping 20-day moving average. Potentially, the Aussie dollar could actually seize the next resistance to come in at 66.65, followed by 67 figure level on the Australia dollar, the Aussie dollar. However, if we start to see a breakdown below 65 figure level, then this minor corrective pullback could potentially extend to test the medium-term ascending channel lower limit. That means the medium ascending channel support level, also confluencing with the upward sloping 50-day moving average at 64.50 level. All right, so still maintaining that short-term bullish outlook on the Australia dollar with the key short-term pivotal support for today at 65.20/65 figure level. Okay, dollar yen. So for dollar yen, we could see over here is that price actually going to hover at the near-term resistance zone that we actually advocate for the start of that minor pullback, minor what I call setback rebound, which price actually going to hover at this level. What we could see over here is that the momentum still continue to remain weak. Why? Because the RSI managed to actually be kept by this descending trendline resistance on the hourly chart. So with that, I was still maintaining that short-term bearish outlook on the dollar yen, but I do not want to use 147.25 as a short-term pivotal support. It's too tight just in case of any whipsaw. So I'm still maintaining at 148.40, which confluence closely with the lower limit of this minor descending channel that is in place since 30th of November, as well as the former minor range top of 30th of November to 1st of December, also acting as a resistance at 148.40. So as long as 148.40 short-term pivotal resistance is not surpassed, maintaining that short-term bearish outlook on the dollar yen, heading potentially towards 145.90. A breakdown below 145.90 potentially exposes the next support level at 144.95/144.80. Okay. 0.80. Okay, only a clearance with hourly close above 148.40 could see an extension of this minor corrective rebound towards the next intermediate resistance level at 149.70. We saw confluence with the 50-day and the 20-day moving average. All right. Okay, so still maintaining that short-term bearish outlook on the dollar yen. Okay, so now commodities market. So now let's move on with the gold price first. So for gold price over here, what we could see over here is that yesterday we do have a short-term pivotal support level at 2006. So price actually managed to actually came close to 2006 before it shaped a rebound. And what's interestingly over here is that upon shaping that lower low during the US session yesterday, price action trade lower, yes, lower low, but the momentum index indicator, the RSI, starts to shape higher low upon hitting the oversold region. So indicate to us that yesterday's push down in terms of price action momentum has started to lose its strength, which is a sign of a bearish exhaustion in this minor we call it a decline that has taken shape since Monday after hitting a fresh all-time high. So with this positive, another signs of positive element that starts to emerge on the hourly RSI momentum indicator. So with that, we will still maintain our short-term bullish outlook for a recovery scenario right now, as long as 2006 pivotal support holds. Potentially the first resistance to watch out for will be 2067 level for today. Okay, so with that, however, if we start to see an hourly close below 2006, then potentially we could start to see a extension of this minor corrective decline heading down towards the 200-day moving average, also acting and the 50-day moving average, also confluencing with the support level at 1955 on go. Now, lastly will be the WTI crude, will be West Texas oil. So the West Texas oil continue to actually hover around the 72.40 short-term pivotal support level that we highlighted yesterday. So with that, still using this level to watch. One thing positive over here is that the RSI has started to shape a bullish divergence as well. Price action show lower low, RSI higher low, indicate to us that this ongoing slide that kick-started since the start of late Friday has started to subside, indicating to us potentially there could be a minor counter trend rebound within a sideways range configuration that is still in place since 15th of November, high at the range top at 79.80. So the first resistance level to watch for today for sure will be at this level over here. That means very closely to this week's swing high area. This week's swing high area at 74.40. So a breakup above 74.40 exposes the next intermediate resistance at 76.70, which confluence with this 20-day downward sloping moving average as well. So still maintaining that short-term bullish outlook on West Texas oil for that potential push up towards the upper limit of this minor range configuration that is in place since middle of November this year. But however, if we start to see a clear hourly close below 72.40 later, then this we call it range configuration could start to evolve into the continuation of a medium-term downtrend scenario towards the next support level at 69.70 for WTI crude oil price. All right. So with that, that's pretty much sum up for the short-term technical outlook for today that I'll share with you all. So what we could see over here is what are the next event to look out for today during the European session. So today will be Wednesday. So what I could see over here is that retail sales will be up for the month of October in European session at 6 p.m. Singapore time later on. And thereafter, during the US session, you have job data, the ADP Employment Change data at 9:15 p.m. So this is a data, it's a privately compiled data. It's something like a prelude to this Friday official government compiled data, NFP. All right. So these are the two important data to look out for today, and as well as for those who are actually looking at the Canada dollar, there will be Bank of Canada interest rate decision out later as well at 11 p.m. Singapore time. So market is almost looking for a stamp at 5%. To maintain their policy rate at 5%. So all in all, right, if you look at the market expectation so far for interest rate hike right now, is more or less has been hit the terminal level. So market is now looking forward to a shift from an interest rate hike cycle to an interest rate cut cycle next year. All right. So with that, that sums up for today daily dose of market insights. Have a great day ahead, and I shall speak with you all again tomorrow. Thank you.